We got more tariff noise in the past 24 hours. Not only Canada apparently will be subject, according to US President Donald Trump, to a 35% tariff on some goods. He's also thinking of hitting yet more countries with big levies. Let's get more from Mike Vinokur, portfolio manager at Propellus Wealth Partners at IA Private Wealth. Thanks very much for joining us, Mark. As usual, all politicians posture, but it's particularly true with Trump, certainly when it comes to his threats.
Yeah, thanks for having me. I think when it comes to Trump, you have to play the man, not the headlines, sort of like poker. And we know his MO. This is the art of the deal. I mean, he tries to say, I'm here, you're here, and then eventually we somehow end up in the middle miraculously, right?
Yeah.
But in the meantime, he, I think, is going to balance out the risks with what the markets do. So the equity markets, the bond markets, the currency markets. Right now, I think he feels like maybe he's got the upper hand because markets are at highs. The bond market has calmed down. The US dollar has come down a little bit, which is good for exports. So, and he passed his big, beautiful bill. So, the president's coattails are strong, and he can maybe, be a little bit more aggressive. We'll see what happens. I believe the deadline is August 1st. So we're literally 3 weeks away. And I surmise that not all of these deals are going to get done by August 1st. So we'll see how disappointing that'll be to markets and how markets may react if, in fact, we're still where we are today.
And Mike, you're cautiously optimistic about the stock market.
We are cautiously optimistic. When you look at the broad index, it's not cheap. Let's put it that way. And you don't have a lot of margin of safety. But when you drill down into the components of the market, we are finding interesting things to buy that are at much lower multiples than the market itself, which have a margin of safety, which have good moats around their business. And we feel that no matter what happens, these specific businesses or industries are relatively cheap. Maybe they pay a dividend, maybe they have a catalyst on them, and that's why we feel very comfortable and excited about owning them.
Let's get to some stock ideas here. We'll start off with MetLife. Seems like a classic defense of people are going to want life coverage.
Yeah, and you know what? It's boring, right? But boring can be beautiful, especially when boring hasn't really moved up a lot. MetLife is not a very expensive company. I think it's trading at 8-9 times earnings. The earnings stream is reasonably stable. It's a great brand. They've got a great moat around it. The balance sheet is solid. The dividend yield is solid. And interestingly enough, there's a lot of AI excitement about the AI companies, and I think not enough excitement about how old, boring companies like MetLife can use AI to become more efficient, more productive, and push more earnings per share, onto the balance sheet.
You'd think they could fire all the actuaries with AI. I'm sure it's not that simple.
Yeah, it's not, but there's definitely going to be a lot more room for efficiency.
It is interesting. I wonder, though, companies are thinking, we'll have AI dealing with our customers. But is that going to open a Pandora's box? What if the AI tells me something that's wrong? Is the company going to be liable? Or?
Right. I don't think anybody has the answers to that yet. I think that a lot of companies are piloting systems that will allow AI to answer simple questions. And as you get into more complex questions, I think the AI right now, as I've experienced it personally, says, sorry, we're going to transfer you to a live agent, please wait, type thing, right? But I think the initial response, I think, can be handled by AI for simple queries, and that's going to take a lot less human interaction and will reduce costs for a lot of enterprises.
Salesforce, another AI play, they are seen as a big exploiter of the technology. You like the stock?
Yeah, so what really was interesting about Salesforce, which we never sort of got excited about it because it was never a cheap stock. However, what caught our eye was the fact that the CEO was talking about how in their own organization, they're going to be able to use AI to massively decrease their own costs. And if their organization is going to be able to use their own tools to decrease their costs, I wonder how much they can transfer to the customer, see what we've been able to do inside, this is what we can do for you, Mr. and Mrs. Customer, and in real time show the savings. So we think that's a very interesting stock. Management is first rate, the technology is great, the brand is great.
You have an idea that'll be fresh to a lot of us, including me. Driven Brand Holdings, DRVN on the NASDAQ. What do they do, Mike? Why do you like them?
Okay, so DRVN is just that simple old economy business. They own about 1,000 or so quick oil change franchises. So they change your motor oil. They have a few other ancillary businesses like Mako paint shops and a few others. They did have a car wash business that they sold recently. So this is one of those businesses that is unloved, quite cheap, great cash flows. They're working through their balance sheet. They're on the right track, and it won't take a lot to move the needle here.